Test. Okay, everybody, welcome back to the afternoon. It is about 5 minutes after 4 on Wednesday, end of the month, October 31st. My name is Pete Renzulli, Class B member, T3 Trading Group, here with the daily recap. Um, really, it's the same story that we spoke about this morning. It's financials strength versus technology weakness, and just to zoom out a little bit here on the spiders, the SPY, I feel this is the best way to get a handle on whether or not the market is helping you out or not right now, and clearly it's not. If you take a look, this blue line is the one that we drew this morning. That is the area that we gapped down from, and we barely touched it 3 days ago, but you can see very clearly for the most part we're trading between, let's just call it 140.50 and 142, other than getting over there that one spot. So really the market's spider's perspective is in a 4-day trading range after the gap down. If we go back out to the daily chart, you can see we do not have really good volume here below that, so we have a push down, a pause, and light volume. Again, technically speaking, that should be a sell short. However, we're not following through to the downside. We are closing now 3 days in a row in the upper half of the trading range, even though we stayed below those levels. And we do have some support to the left, not only from the trading range that we've been in, but if you go all the way back to August and beginning of September, the 140 level comes in as a pretty good support level. So the downside profit potential, meaning if you short sell and looking for trades to the downside, has significant support to the left. Okay, now basically what I'm setting up there is, other than stock specific plays right now, the market and or the spider specifically needs to take out this 140 level before you can size up and expect to hold it a little bit longer. Now, to expand a little bit on what we just talked about, as the battle lines have been drawn right now between technology and financials, we'll start out with the XLF. And XLF, not exactly on fire the way it was in September, but not rolling over like you see a lot of the technology stocks. And we'll get to them in a second. So you can see here clearly, again, I'll go to an intraday chart just to give you a little better feel for it. Chopped around for the most part of the day, but again, closed near the highs. We will get into Citigroup as well. Very much same thing. And as you can see here again in Citigroup, since the beginning of October, so this entire month, we had only 2 days, well, actually if you include the first day, 3 days out of the entire month that closed below the 80 MA. So very, very solid relative strength. So if you're looking at this from a potential trade perspective, we have now just gone and retraced to what is a downtrend line. So tomorrow, this level in Citigroup, this 37.40 level, is going to be a pretty big one. And basically the same thing here in Goldman. Not quite the perfect downtrend as in Citigroup. But you can see clearly here that we did break this short-term downtrend and had a pretty good day. And I guess we could really bring this out by looking at the intraday chart, and you can see that it was relatively strong the entire day. And here's where we broke that downtrend on the daily. So if we just finish up with one or two more stocks here in the same area. JP Morgan not as strong. You can see it's actually doing very similar to what the market's doing, kind of chopping around here for the last 4 or 5 days. So it seems like Goldman, which finished up 296 today from the previous close and 267 from the open. So pretty much today's low is where most of the buying came in, and virtually the entire day. Now, if we start to gravitate over to some other sectors, and we'll get into the Netflix news in a second, we're going to switch over to a little bit of BHI. Very nice bear flag here on the daily chart that followed through. Chevron was one that we talked about today as well. Nice bear flag that followed through, although it did close off the lows, but it did have almost a $3 trading range today off of a failed test of the previous day's high. XOM, decent flag, not really, hasn't closed below the 50 that much, so Chevron and BHI seem to be the better of the two. The point that I'm trying to make here is there is a monster battle between clarity and lack of clarity and whether or not we want to be long or short. Apple continued to roll over today. It was weaker in the morning. Found a little bit of a decent, sorry about that, a little bit of a decent pennant here, and we finally broke out above the pennant, got above it, and never really looked back. It was a pretty decent move, but the real range was this 595 level. Once we got above that 595, you kind of felt like you were in a good position there to start to fill a little bit of yesterday's range, and it eventually did, but it pulled back about $4. So again, when you're trading these stocks, you have to make a determination. If the stock has a wider volatility, a wider average true range, however you want to word it, you can see here on the bottom. The average true range for Apple is $16. You have to make sure that you are trading the right share size to allow the stock to fluctuate enough to still be in the trade when the trade actually happens. So again, nothing wrong with trading them. You just have to make sure that you can withstand what is a normal movement. And even here you can see on the 15-minute chart it's over $3. So again, opening lower, pushing lower, and not closing near the lows. We're starting to see this work its way into everything that we're looking at right now. So one of two is going to end up winning the battle. The thought process behind what you're looking at right now is the technology stocks, for the most part, have had poor to disappointing earnings. The financials, okay, but no matter how you slice it, whether you're fundamental or technical, there is a bid under the financials right now, and they have not rolled over, just as you can see here with the strength of Goldman and Citigroup specifically. We had a couple of shorter-term breakdowns this morning that we were looking for, and potash was one of them. We had 2 inside days followed by an outside day and another push down. The really good setup here was to be looking for it to short sell out of this intraday range here, and then on the intraday chart we actually did have 45 minutes worth of consolidation. We were looking for the breakdown. We actually got the breakdown, but then we got a lot of sideways the rest of the day. The point that I'm trying to make here, and we just want to touch on Disney before we get to Netflix. Disney, obviously, the stock that we called off this morning, off of the Lucasfilms buyout, and Home Depot actually had an unusually large intraday range here as well. $2 intraday for Home Depot is a lot. You can see down here $1.11 is what it normally does, and I have that on the 14 period ATR. That's double what it normally does on increased volume. How many times are you going to hit 63 and not get through there regardless of what the price targets are? I'd be careful shorting Home Depot just based on the size of the move, the size of the volume, and the fact that that's the third time this month that it couldn't get above that level. I guess the one that everybody's talking about the most today, Netflix, the Carl Icahn story where it turns out just under 10%. Let's actually go to the intraday chart so you get the full effect here. Right around here is when it got announced, found out, however you want to word it. Interestingly, it got halted up here and then sold off $6 right after the halt and kind of hovered near the highs. But if you put it in perspective on the daily chart, if you go out to a little bit longer time frame, you can clearly see here the $85 level has been the level that it hasn't been able to get through, and it got up to 84 and change, if I'm not mistaken, today. 84.95, so literally came within a nickel. Actually, that may be a little more, 86.65. So got about another dollar there compared to where it just pushed through from today's high. The thing is this, though. Everything that you do as a trader, you have to eventually get to the point where you are starting to weigh risk-reward, and does the risk I have to take get justified by the potential reward? Now, the stock has just gone from 57.50 to 85. That's almost a $20 move in 4 days. Do not confuse stocks going straight up or straight down with yourself being this great prognosticator. The reward potential on longs at this point has diminished significantly regardless of the fact that there's news out of the stock right now. So the better trade in Netflix tomorrow, in my opinion, is if you get a lower opening and then find a spot intraday to bid, as opposed to if the stock opens higher, which you can see here the 200 EMA is just above where it closed today. Give yourself a good realistic spot to manage risk. You don't want to be getting involved just because it's in the news. Everybody's going to read about it tonight and it ends up popping higher, and then you're left holding the bag because $20 higher. All the buyers are in after the news is out. So if we just followed it up a little bit with looking at the Qs, you can see the Qs have an inside day today. So inside day pushed down after a bottoming tail on the last traded day. Expect some volatility in the Qs today. Now, the interesting thing is the fact that the Qs did not break down with some of these other stocks that were coming in pretty hard that we just covered. So you have to also feel a little bit here that as a trader, you have to know what you're looking for, and if it doesn't occur, you have to start to take a step back and start to say, well, what I wanted to see did not occur, so I have to trade a little more cautiously. So the fact that we had an inside day instead of pushing to new lows when a lot of those bigger tech stocks did make new lows, I'm not as inclined to be aggressive on the short side. So again, if we go to the spiders here, again, I'm not saying we're going up tomorrow, but we're sure having a hard time going down. This is 5 days in a row with really bad earnings in the tech area, in my opinion, really bad earnings, and the financials not rolling over. So the main key out of every stock you're watching right now is you should be watching the battle between the financials and the technicals when they eventually both get on the same side. And I'm not saying long or short because nobody knows. When they get on the same side, that's when you, from a trading expectation perspective, will have a reason to size up and hold a little bit longer because all of that money will be on the same side as opposed to this big battle that we have going on right now. The only other one that I thought was a little bit interesting was Goldcorp, and obviously we can go to GDX. Nice little breakout there, and ABX. Interesting. I was actually looking for GG to fill the gap a little bit today, regardless of all the the flight to quality stuff that might be going on. Just 4 days ago, it was a really, really good sell short, and you can see the descending wedge here, but it didn't. So you got to pay attention to that a little bit too. So as this starts to get a little higher to 47, you can see 1, 2, 3, 4, 5 times in the last 8 weeks it hasn't been able to get through 47. So if you like the stock long, you know your ceiling. If you like it short, you also know your ceiling. So it's really just a question of where you want to get involved. But if you just take the apex of where the stock is right now, it's kind of in the middle of this 2-month trading range. So not really a monster edge long or short, just the fact that it gapped up and held, stayed above the open, tells you there's some underlying strength there. So the bottom line is this: the better trading or the easier trading or the trading with less stress right now is letting the market unfold a little bit intraday. We're not as clear to get involved early. That's the point that I'm trying to make. We got below 13,000. We're above 13,000. We closed there above again in the Dow. Let the market unfold a little bit during the day. Let the shorter time frames intraday start to get a little clarity with your longer term ideas. If you get it, fine. You can get involved. If you don't get it, step back. You don't have to be involved all the time. It's a tape right now that's a little bit trickier, and you don't want to get slapped around just simply because the market's open and you want to do something. All right, we will have a morning call tomorrow, shootout most likely between 8:30 8:45 tomorrow if everything goes smoothly technology-wise. Have a great night, everybody. I will speak to you tomorrow.